How long have you had been in this specific niche? Did you set out to do grocer anchored, or did it just evolve that way?
We did. We started this business about 30 years ago, and we bought a grocery anchored shopping center. And over the last 30 years, we've been building that portfolio. Today, we're one of the largest owners of grocery anchored shopping centers in the country. We're Kroger's largest landlord. We're Publix's second largest landlord. So we're been active in the business for a long time and built a great team that is very focused on that very specific niche.
Oh, is it truly recession proof, or is it just that they do less bad than everybody else when we have these economic downturns?
No retail is recession proof, but as far as resilient and having reacted very well to the last two very difficult situations we had, both in the great financial crisis and the pandemic, we lost less than 0.8% of our occupancy during the entire pandemic, and during the great financial crisis, we lost about 1.8% of our occupancy.
Wow.
So we really held together very well, and it's because of the necessity-based focus of our shopping.
Record high occupancy as of Q1, 97.5%. That's pretty interesting. I mean, obviously, you face a little bit different headwind right now, which is maybe Kroger-Albertsons merger. Now, they've said they're not going to close any stores, but that would affect you guys. You should be testifying about the impact of this, because you're probably one of the main people being impacted.
Yeah, we're actually very optimistic about the merger. We question whether it's going to happen or not, and certainly the market is saying that it may or may not happen.
Right.
But for us, Kroger's a great operator, and we think that they would bring additional benefits to the portfolio if the merger were to come through. And if it doesn't happen, we've got really strong Albertsons in our shopping centers, so they will continue to be grocery stores over a long period of time. So we're watching it, it's early days, I think.
Yeah, Albertson shares don't look like they are necessarily pricing in high odds that this gets done. And after what happened with Microsoft, and of course we hear from Lena Khan all the time, and there just doesn't seem to be a big appetite for this right now.
No, we're seeing the same thing. The unions came out this week against it. There's a lot of conversation, so they've got a long way to go, and we hope they can figure out how to do it. But it's going to take some very different shape probably than what everyone anticipated going in.
Who else are usually there's kind of like a main grocery store anchor. There might be a few smaller kinds of stores. Who are those retailers? Where are you seeing growth? And we're going to talk about this a little bit later on, but the suburbs seem to be an area of strength right now because of the massive population distribution. Yeah,
there are a lot of tailwinds in our business right now that are not necessarily tailwinds for everybody in the real estate business. Suburbanization, the movement to the southeast, the ability to buy local, all of those things, those trends, and particularly work from home, are pushing people longer in the suburbs, which has been a big benefit for us. And the new retailers are coming in and are recognizing that. Some are old names like Starbucks and Chipotle, but we also have a lot of people coming in on the med-tail. So people are trying to bring medicine closer to your home, so it's more convenient.
Clinics, urgent care, I see them popping up everywhere.
Yeah, and it's dentists and it's eye doctors. It's really a wide range of trying to make it easier for you to get your medical services done.
So do you think, your stock, like you said, it's not as if anybody can be recession-proof, but will you guys be buying back shares? How do you expect to weather this? And what do you make of, listen, high interest rates and commercial real estate problems are in some ways a headwind for everybody. So what do the next, 12 months look like?
Yeah, I think the way we see it, we like our stock. We don't like where it's priced right now. We think there's a lot of upside in that. But we like the fact that we have a pretty low beta because we're necessity based. 31% of our income comes from the grocer. You've got a very stable environment. We pay a good dividend, so you're getting that ongoing cash flow. So there's really we believe there's less beta in the stock. But we also have a pretty active growth strategy. I mean, we drive a lot of internal growth by leasing space up, getting good rent spreads on our neighbors as we renew their leases. So we are getting that, and then we also have a very active acquisition plan. When we did our IPO about 2 years ago, we set up and we continue to be at a place where we can buy about $1 billion worth of new grocery-anchored shopping centers over the next 3 years without having to go back to the market. So we're excited about that kind of opportunity.
No, it's earlier we had an interview with Bill Rudin, obviously very New York City centered, and you're sort of like the complementary side of that, of some of the very headwinds they're experiencing, maybe tailwinds elsewhere. Jeff, thanks for your time today and joining us.
Well,
Appreciate
it was great to be with you, and thanks for your time.
I'll be thinking about you next time I go to Kroger.